A very warm welcome to all of you. A good morning. I hope everyone is doing fine. This is C. Ritima Bhatia, and we are discussing capital gains for the inter-tax level. I hope you people got time to revise your concepts for the capital gain part, which we have done up till now. So, abhi tak we were moving in a bit slow pace so that the concepts could be inculcated properly. We discussed about transfer, capital assets. We discussed about charging section, capital assets, long-term, short-term. Then in the previous class, we discussed about your computation of capital gain, your section 55, which talks about cost of acquisition, different types of assets. So I hope up till now your concepts are clear. In case you have any doubt, for the next 2 to 3 minutes, we'll take specifically only your doubts. You can settle in meanwhile, and then we'll begin. Any of your previous class doubt, if it's left? Asha, last class, I remember there was this difference which was coming in the question which we did. It was just because of points, because I multiplied the answer which was coming into points and I rounded off. So, wo jo last ka hundreds ka kuch difference aa tha, that was right. So, it was okay. I think 70,000 something a question, that was right. Here, in this question, I think 97,745, kisi ka 97,6 something aa raha tha, so that was also right. So those who are joining now, welcome again, and please settle in and ask your queries so that we can begin for today's class. So today's class, I'll brace yourself first that today's class would involve a lot of technical concepts in relation to what you have studied in accounts, otherwise your understanding which comes from various parts. So the class again would be very technical, but yeah, we'll try to make it as interactive and as easy as we can, okay? किसी को कोई डाउट नहीं है? श्योर? Yes, Siddhappa, whatever we are teaching, revising that would be sufficient enough. In fact, today, in your assignment sections, you will get few multiple choice questions which will help you revise the concepts better. The notes also would be uploaded soon, but the multiple choice question for practice for the previous class and today's class would be uploaded today. So that you can practice in this weekend time and can get hold of all these concepts. Okay? Reckon means जब से आप calculation start करते हो, Ankur. So when the period reckons means the times of calculation start from that day. So we did. I gave you question in the previous class. Thank you, Tisha. If hope you people have solved the answer. So the question was taking the acquisition amount, cost of acquisition as 4 lakh. If you have not solved it, quickly solve it in 1 minute and then we'll begin. And if you have solved it, please tell me your answer. Menon, please ask, what is the doubt? Okay, correct. Muskan says, Himanshu say, okay, I've got answer from Muskan and Himanshu and Tisha. So the answer is correct. It's 2735 ka loss or 27300 ka loss. Anything between 27250 to 27300, if the answer is it's right. With decimals points for leke, if the conversion is coming, that is not a problem. So it's a capital loss. So Sneha, well done. Muskan, Himanshu, Tisha, good. Vishali, no, the answer is not correct. Atif, correct. 27,300 ka capital loss or 27,235, whatever your amount comes. Ankur, very good question. How to calculate period of holding in case of bonus shares? So period of holding for any shares generally begins from the time of its allotment. From the time of its allotment, there are various stages. There is a stage of your what you say, there's a stage when you apply for the IPO, then it is gets subscribed, the subscription closes, then the IPO is allotted, then the IPO is transferred, the shares are transferred in your demat account, then the shares get listed. So out of all these various date involves, generally the period reckoned from the allotment, the date when the shares were allotted to you. No, Harshit, no. So those who did not get correct answer, you have to divide your cost of acquisition of 4 lakhs from the average buying rate and selling rate on the date of acquisition, which is 52. You'll get some 7692, and then your dollars, the share price is 7276. So there's 419 ka loss in dollars. Then you convert it into TT buying rate. So 27,300 k around, you'll get your answer. I hope you got your mistake, Harshit and Vishali. Perfect. So let's begin now. So abhi tak again and again, I was saying that section 45 में मेरा taxability का year would always be the transfer का year, right? Sorry. This was something I was saying again and again, correct? Year of taxability would be the year of transfer. You have to see which year the transfer has taken place. In that previous year, you will offer the capital gain or the gain arising from the transfer of the capital assets. Correct. This is what section 45 says. Now, in the coming few minutes, we'll be start talking about the exception to this general rule. This is my general rule, which talks about year of taxability, and that year of taxability would be year of transfer. But in the coming section, which we'll be understanding, the year of transfer and the year of taxability would be different or might be different. What did I say? Abhi tak we understood that it would be taxable in the year when the capital gain would be taxable in the year when it is transferred. So if it is transferred in 1819, then previous year 1899 you will offer the tax. If it is transferred in 1920, in previous year 1920 you will offer the tax. As simple as that. But now we'll study about the various differences where, or the various situations where the taxability year and the transfer years are different. Now, students, one thing again and again I'm saying you, when you're doing a capital gain question, think yourself as the person who is holding that capital asset and is selling it or transferring it. Why? Because it becomes easier to ask such questions from you. Every time a capital gain questions come, you have to see first there's a capital asset or not, or if it is transferred or not. Then few questions which step by step you will ask yourself about the period of holding. A period of holding के लिए you should know the date of acquisition and the year of transfer. Correct? Yes. Because the difference of it will help you decide whether it's a long term or a short term. Then उसके बाद you will see what is the full value of consideration. You will see what is the cost of acquisition. Am I right? All of these questions will help you solve your capital gain query. Correct. So all of these questions, immediately when a question comes, you should seek the answer of that. What is full value of consideration? What is cost of acquisition? What is period of holding? Write it aside and then do the question. Okay. Now, first exception which comes to the general rule of year of taxability is equal to year of transfer is section 45(1)(a). Let's start from this insurance claim. What is this? Now, if your capital assets get destroyed or destructed or damaged due to any natural calamity, it can be flood, earthquake, hurricane, typhoon, or any cyclone, anything, or because of civil disturbance and riots like we saw in previous days, or because of fire or explosion, or because of an action of an enemy or action taken in combating the enemy, your assets are getting destroyed. Your capital asset is getting destroyed. Now there is no more the asset. The asset has been vanished. Extinguishment of asset has happened. The moment there is extinguishment of asset, it is a transfer. You agree on it? Yes, you agree on it. So my year of transfer is would be when the asset is extinguished, right? That is when the damage happened. But here the year of taxability would be different. Here, the year of taxability would be different. I'll tell you the reason why. The year of taxability would be the year in which you receive the insurance claim. In which you receive the insurance claim. Why? Nothing. So the people in the income tax department are considerate enough. They are saying, okay, the asset got extinguished, suppose in financial year 1920. But you know insurance company, right? They do not generally give the claim so fast. They take their own process. Sometimes it extends to 6 months, and obviously the financial year may change. They do their own inquiries and all of these stuff. So that's why the time period gets delayed. So income tax says that if we tax you in the year of transfer, which is when the asset was extinguished, then you don't have any money in your hand, and otherwise, and also the insurance amount, the full value of consideration which you will be receiving is also not clear, because no one gives a guarantee कि इतना amount का insurance आएगा, right? There is a coverage defined, but what amount will come finally as claim, no one knows, correct? So that's why the year of taxability is deferred to when the insurance claim is received. So when the insurance claim is received. So suppose insurance claim is received in financial year 2021. So I will offer the taxation in financial year 2021. But the next question which I always ask you to see is the period of holding. The period of holding would be from, to see whether the asset is long term or short term, will always be from the date of acquisition to the date of transfer, not to the date of taxability, but to the date of transfer. So here, the period of acquisition, suppose the asset was acquired on 30th of January 2009 or 2017. And here, the asset got extinguished on 30th of June 2019. And we are here talking about building. And the claim came on 4th of April 2020, suppose. Now your period of holding would be from 30th January 2017 to 30th June 2019, because asset to sirf is period tak tha, right? Asset was only available in your hand till this period. Even if the taxability is deferred, we're only deferring the taxability. We are only postponing the taxability. We're not postponing our calculations or the concepts of transfer altogether. We are just postponing the taxability. So the period of holding will always be from this period to this period instead of this period, to see the whether the asset is classified as long term or short term. Is it clear? Yes. So if it's a building, this would be a long term capital asset because it is more than 24 months. Clear? Yes. Then about indexation. Indexation करते time, first of all, you have to see what is the cost of acquisition. Cost of acquisition would be simply the cost at which you acquired, which is here. Clear? That is also clear. Now, how will you index it? How will you index this whole thing? Indexation will happen by taking the actual cost which you paid. यहाँ पे हम क्या करते हैं? CII of the year of acquisition, right? And we multiply it by CII of year of transfer. And ये transfer का ही CII रहेगा. Hence, in this case, it would be financial year 1920. It is not anyway will be financial year 2021. And you will say why? Even if we're offering the whole capital gain calculation in financial year 2021, ये income tax return जो assessment year 21-22 का होगा, it will go in that. But the taxability, even if it's getting here, but all the calculation, the transfer has been done in 1920 only. Why we deferred the taxability? Because we did not know of the full value of consideration, which is the insurance claim. Hence, we are just waiting for getting to know our full value of consideration. That's why we are just deferring the calculation. We are not deferring the taxability. We're nowhere deferring the calculation or playing with our concept of transfer and all those things. We are just deferring the taxability. Taxability को ही defer कर रहे हो. आपका calculation would always be this, where the transfer year is. So it is very important to extinguish between this and this to get the correct answers in your question. यहाँ पे you will not take the year of taxability, and the reason is clear. आप बस defer कर रहे हो. You're just deferring the taxability. Concepts are not getting deferred. And why we are deferring the taxability? The reason is clear. Insurance claim amount is not known. So hence my full value of consideration would be the insurance claim. Is it clear? So all of these answers when received, bas kya karna hai? You will write all of these things in your notes. The part of the question should always be only full value of consideration, less index cost of acquisition, capital gain. Other things should go in your note. That the taxability will happen as per section 45(1)(a) in the year of insurance claim when it is received. However, the year of transfer would be 1920 only, and hence indexation has happened taking CII as this for the year of transfer. And hence it's also a long-term capital asset. How it's a long-term capital asset? It should be part of your notes. Always assume that the teacher does not know anything. You have to tell them that why you are taking so and so thing. Even if it's a basic thing, please write it in your notes. Please write it in your notes, always. And the body of the main answer should be nothing but what the teacher is asking. If they're asking about the taxability, give the taxability. If they're asking about the income, give the income. If they're asking about yes or no, just give them yes or no. All other parts should go in your working notes. Okay? Is it clear? यहाँ पे किसी को कोई doubt? Because if this is clear, this is a very basic thing. Then we'll move to something again very technical. So Dhapa, I'll take definitely the example for the next concept. It will be clear more. Next, which is important, is your section. जिसमें से at your level people guaranteed कि question आएगा ही आएगा. So mark it as important. Next exception to the general rule is section 45(2). Conversion of capital asset into stock in trade. Please do not make notes. Everyone focus on the screen. I'll give you time to make notes. Now, if you remember, conversion of capital asset into stock in trade is a transfer as per section 2 clause 47. Yes? Yes. Now, if it's a transfer, then how is the taxability is happening? Let's please be very, very, very attentive on scene. Let's see the example of I'm a jeweler. I have jewelry at home. That is my capital asset, correct? Now, I am using that jewelry as my stock in trade and I will sell it. Stock in trade says whatever income comes is business income. Capital gains says whatever income comes is capital gain income, correct? Now, let's see. At least first we all agree that there is a transfer. We also agree that there is a capital asset. Whatever I'm saying again and again, I hope that is clear. Now, next thing we see, period of holding. Now, let me give an example. I purchased jewelry in financial year, or let's start right date only, on 15th December 2017. Okay, it was transferred or it was converted into stock in trade on 30th of November 2020. Okay, any doubt? And that stock in trade was sold. The jewelry was sold. Sold matlab sell, actually selling hua, business selling on 5th of May 2021. Now, what all financial years are getting impacted here? My financial year is 1718. Here my financial year is 2021, and here my financial year is 21-22. Transfer happened in which year? When the conversion happened. So my year of transfer is 2021. 2020-2021. Clear? Yes. So the period of holding would be from 15 December 2017 to 30th of November 2020. Is it long term or short term? It is October 2018, 2019, 2020. It's a jewelry. Or let me change it to long term because I want to explain you the concept of indexation here also. 1 second. Let me make the asset long term. Now it's long term. Correct? Yes. Year of transfer pe we all agree. Year of transfer pe we all agree. Period of holding is also long term. Now, let's move forward and understand cost of acquisition. Cost of acquisition kya hoga? See, this period abhi it is not mattering. So let me just ignore 21-22. Cost of acquisition would be what? 15 December ko jis price pe I have taken that capital asset. So cost of acquisition would be simple. Suppose I brought that jewelry for 5 lakh. Okay. Any doubt? No. Now, in general rule, you will say, ma'am, the capital gain should be taxable in the year of transfer, and the year of transfer is 2020-21. Why? Because the conversion happened in this year. Correct? Yes. Now, think and tell. It will not unfair that you are just transferring one thing to another. It is the ownership is same, no doubt, but the conversion has happened and you have to pay capital gain. There has been no inflow of cash to you. Has there been any inflow of cash to you, whether through business or whether through transfer? No, there is no inflow. On conversion, is there any inflow of cash? No. I hope we both agree on this. Yes. Now you will see that when there is no inflow, I am giving the tax from my own pocket. Why? Because transfer has happened, conversion has happened. Again, the income tax department said, okay, we agree that there has been no inflow, but there is a transfer. We all agree on it. So let's again defer the taxability. Let's again defer the taxability. Let's defer the taxability when you actually have an inflow. When you actually have an inflow. And when will that inflow happen? When that stock in trade which is converted, when that stock in trade which is converted is sold. When that stock in trade which is converted is sold, that means whenever the stock in trade is sold, there would be an inflow. Hence, in that year, we will make your capital gain taxable. Hence, in financial year 21-22, the taxability will happen. But conversion happened in which year? Transfer happened in which year? 2021. But taxability only is deferred to 21-22. Reason being, there has been no inflow until the stock in trade is sold. Right? Until the stock in trade is sold. Now you will ask, ma'am, theek hai, samajh aa gaya. Year of taxability clear, year of transfer clear, year of acquisition clear, cost of acquisition clear. But how is capital gain has to be computed? Now, suppose if I tell that this stock in trade was sold for 9 lakh. Because this same jewelry which I acquired for 5 lakh was sold for 9 lakh. Now you will ask, my full value of consideration would be 9 lakh. Will it be 9 lakh? I say no. The full value of consideration would be deemed to be the fair market value on date of conversion. Fair market value on date of conversion. So suppose the fair market value on date of conversion is 7 lakhs. That is on 30th December 2020. उस jewelry का fair market value is 7 lakh. This would be my deemed fair full value of consideration. This would be my deemed full value of consideration. ठीक है मैम, clear हो गया. But one thing, we're offering the capital gain in 21-22, then how the indexation would happen. Now let me show you the proper calculation. Full value of consideration is, first of all, this will happen in assessment year 22-23 in the income tax computation of capital gain. This will not happen in the year of transfer. We are studying the exception. So the exception is the year of taxability would be the year when the stock in trade is sold, but transfer will obviously happen when the conversion has happened. अगर ये चीज अगर आपको clear होगा, you will do the question correct. Now full value of consideration is the fair market. हमारा transfer क्या है? हमारा transfer is not the stock in trade being sold. हमारा transfer is the capital asset being converted. So the capital asset being converted, when it is converted, whatever is my full fair market value would be my full value of consideration. That is 7 lakh which we took. Correct? अभी तक यहाँ पे किसी को doubt? No. Then my cost of acquisition is 5 lakhs. Will I do 5 lakhs completely? No, because it's a long-term capital asset. So I will index it. I will index it. Indexation happens in CII into year of transfer divided by CII of year of transfer divided by CII of year of acquisition. So if I take what is my CII here, there is a table. 1 second. So my year of transfer is 2021. So this would be 301. My year of acquisition is 1718. $272. What is the capital gain coming? This is my capital gain long term. Now, students, यहाँ पे ध्यान से देखो, हो वही रहा है जो अभी तक हमने पढ़ा है. Year of transfer, year of taxable, year of acquisition, everything is happening here. But हो कब रहा है? In which the asset is sold, in which the stock in trade is sold. Everything is happening as per the concept which we studied in section 48 only. But it is happening as in a different year. Nothing is changing. 21-22 का हमने ना यहाँ पे लिया ना period of holding में लिया. We did not take anything of 21-22 in either the indexation or the period of holding. But we only deferred it. It's just like कि पैसे आज जेब से ना देने की जगह capital gain हम तब देंगे जब पैसे हमारे पास आएंगे. When we have the inflow, only then we'll pay the money of taxation or the taxation of that capital gain to the government. As simple as that. If you understand the reason behind it, you will get the question. Now, will the question stop here? No, Baba. Whenever such question comes, there will be always two types of income. Whenever a conversion of stock in trade question comes, there would always be two types of income. Why? Because stock in trade bhi to bika hai. There is a business part also. है या नहीं है, right? So there is a business part. Business part क्या है? My business, यहाँ पे तो my capital gain income आ गया. This is my capital gain income. But what about my business income? Business income, sale price minus purchase price. तो sale तो उन्होंने किया for 9 lakhs this jewelry. This is clear. But purchase price क्या हुआ? What's the purchase price? Purchase तो नहीं किया था. But deemed purchase price क्या होगा? यहाँ पे what has been the deemed full value of consideration would be the deemed cost for the business. The deemed full value of consideration, जितना conversion पे you're taking the income part, वही तो income acquisition part होगा for the business, right? Jewelry कहीं से acquired तो किया नहीं, right? Jewelry was not acquired from anywhere, it was just converted. अब conversion के लिए purchase price क्या ले? यहाँ पे whatever on which amount we're offering the tax, that should be the amount from which I would reduce my income. So 7 lakh would be my acquisition price here. So what was the full value of consideration for capital gain would become the acquisition cost for calculating the, or the purchase cost for calculating the business income. Hence, my business income would be 2 lakhs. So always when a question of conversion of stock in trade and capital gain comes, please assume that, please think that there would be two income in the year of selling of that stock in trade. The income one would be the capital gain income and income two would be the business income. Capital gain income would be as per the year of transfer. Everything would be as per the year of transfer. And business income would be at what price actually the stock in trade is sold. Clear? Take a minute and let me know if there's any query. And ये इकट्ठा करने से अच्छा खुद से पूछो कि what should be the cost of acquisition, what should be the full value of consideration. Thank you, Harshit. So what if you never sell stock in trade? If you never sell stock in trade for 5 years, no capital gain would come for 5 years. Capital gain incur हो चुका है, बस tax नहीं दे रहे because inflow नहीं हुआ cash का. Is it clear? Siddhartha, now is it clear? Purchase price is equal to the fair market value, which is on date of acquisition, date of conversion. तो conversion का जो आपने basically जिसको income tax में ना nothing comes easy up until and unless you've offered the tax route, you cannot take the benefit of it. If I have not offered tax on it, I will not take the benefit of it. ठीक है, जहां मैंने conversion price पे tax दे दिया as capital gain, now I can claim that conversion price as my full value of from my cost of acquisition for business income. Yes, 7 lakh is the fair market value as on 30th December 2020. क्वेश्चन में फेयर मार्केट वैल्यू वुड बी गिवन. क्वेश्चन में फेयर मार्केट वैल्यू आपको कंफ्यूज करने के लिए टू डेट्स का फेयर मार्केट वैल्यू वुड बी गिवन. फेयर मार्केट वैल्यू ऑन डेट ऑफ कन्वर्जन एंड फेयर मार्केट वैल्यू ऑन डेट ऑफ सेल. What you will take fair market value on date of conversion, not date of sale. If cost of improvement is there, deduct that also. See, capital gain को करना exact same तरीके से है by taking the concept of transfer, year of transfer. Everything is same. Only the heading of the taxability year is changing. Nothing here. यहाँ पे did I took 21-22 as my CII? No, I took 2021 because always since the understanding of capital gain, we are saying year of transfer से index करना है. So year of transfer से जब index करना है, तो then year of transfer से index करना है. Nothing has to be changed. Only the heading where you are showing this computation that is changing. That's it. If they never said it, so there would be no offering of the capital gain tax. But obviously the department will ask if security come that how did you get this stock? And you will say that this was a conversion. And did you sell it? You will say no. So the department will say nothing. See, the idea is जब तक आपको उस स्टॉक से इनफ्लो नहीं आ रहा, how will you pay tax on it, correct? Business income would be for the year 21-22. Fair market value would be given. Pradeep, I think that is a very hypothetical question which you are creating just to make the concept more confusing. I would say at your level, so you should restrict into the simple कि asset sell हो गया, stock and trade sell हुआ. Okay. Thank you, Preeti. Any other doubt? If you need the example, I am putting it on screen. And generally, for interlevel conversion of stock and trade, the question alternate years में आता ही आता है generally, because it is an important concept. Himanshu has a very good and technical question. That ma'am, why full value of consideration is my fair market value on date of conversion, and why not sale consideration? Would someone like to answer it? If someone answers it correct, I will get that that person has got the concept. Otherwise, I'll answer it. So Himanshu is saying why we are taking full value of consideration as my fair market value on date of conversion, and why not sale consideration? Pooja, you can tell me what I can take care of. I will definitely take it from today itself. Okay, very good, Mahadev, because sale is business income, correct? Okay, we are calculating capital gain, sale value, if sale value is considered, then for the purpose of business income. Okay, because selling price is my business income. Don't know this, the sale value on date of conversion. Okay, absolutely. So somewhere around everyone is getting technically right. The point is the capital gain if instead of converting, if I would have sold it in market, instead of converting, if I would have sold that asset in market, then what would have happened? I would have fetched the fair market value, right? I would have fetched the fair market value, whatever the market price is going on, that I would have fetched on the date when such conversion has happened. Instead of converting, if I would have sold my capital asset, right? So that's why they take that full value of consideration as my the deemed full value of consideration, hence is my fair market value instead of the sale price, because when the transfer is happening, that is when the conversion is happening, whatever the actual market price would have been, that would only be my full value of consideration. Okay, so I hope, Himanshu, your question is answered. For converted asset, year of taxability for capital gain and business gain would be same, because again यहाँ पे year of transfer is when the conversion has happened. Year of taxability would be when the business income has released or when the stock in trade was actually sold. So hence the business income and capital gain income would happen in the same year, Vanati. Okay. Pooja Diaram, I'll be waiting for your detailed reply. I think that would help me also. Clear. Next, shall we proceed? 45 clear? Exception. So whenever students you're doing exceptions to general rule, हमने अभी तक क्या किया? This is your actual homework. You will write year of transfer, year of taxability, full value of consideration, and your cost of acquisition. Basically, period of holding would be till year of transfer always. Okay. This table you will make for your homework. Sorry for my bad handwriting. जैसे अभी we did section 45 1A, section 45 1E we did section 45 2, which is your conversion, and we'll do abhi 2 more. Okay, so this is how you will prepare the table. Okay, यहाँ पे you will write it, and this would help you remember it. Clear? This is your homework once we do all the sections. Next, student, just like the 2 exceptions which covered, next exceptions come to us with section 45(5). Now again, compulsory acquisition. Compulsory acquisition is also a transfer when we understand the definition of section 247. Yes, yeah. So compulsory acquisition में क्या होता है? Government takes your property and then they decide a compensation amount. They decide a compensation amount which you will receive for that acquisition and they take your property. So again, the year of transfer is when the compulsory acquisition has taken place. The year of transfer would be the year of compulsory acquisition. So suppose if they came to me in financial year 2021, one cold morning of 31st January 21, and they said that we have to build the highway from here, so you need to vacate your godown. So that is, and they pass an order to me and give it to me. That would be my year of transfer, okay? Because the property is compulsory acquired. But since you know who decides the compensation, the RBI or the central government decides the compensation. Now, since you know that government may immediately you do not get anything. You have to wait for long years to get the compensation. So compensation kab aayega, you don't know. You don't know. It may happen in the same year. It may happen in a different year. Probably after 2 months, 3 months, 6 months, 6 years. You never know. So hence the government say again with the same concept कि जब inflow आपके पास आएगा, when the money come to you, then pay the tax to us. When the money come to you, then pay the tax to you. So the year of taxability would be when the compensation is received. So suppose the compensation was received after 6 months in September or say 9 months in September 2021. So my year of taxability would be financial year 21-22. Okay, now compensation received. So suppose karo they came and they acquired the property, and the compensation which was decided was for that property was 50 lakhs. The government decide करता है, ठीक है, 50 lakhs. Now सब कुछ maybe एक साथ ना आए. Maybe I not receive the entire amount in one go. It may happen that 10 lakh is received in September 2021. Then 10 lakh is received after 3 months, say in December 2021. Then 10 lakhs is received again after 3 months in say March 2021. And 10 lakhs basically in each quarter I am receiving this 50 lakhs and not in one go. Now your question will come, ma'am, if we are receiving the compensation and installment, then in which year the taxability will happen if the compensation is received in 2 different years? Will it be proportionated? The answer is no. The year of taxability would be when the first compensation is received or the first installment of compensation is received. When the first installment of compensation is received. So even if a minute amount is received, in that year the taxability happens. So out of 50 lakhs in September 2021, even if I have received only 10 lakhs, but I will offer it to tax in full. That means my full value of consideration would be 50 lakhs, which is my compensation amount. Even if only one installment is received, 50 lakhs would be the compensation full value of consideration in financial year 2021. I'll be showing, but year of transfer indexation will all happen as per financial year 2020, 21, and the taxability year would be 21-22. Again, I'll repeat. So 50 lakhs would be offered as full value of consideration, and the capital gain would be calculated on it in the year 21-22, but all the capital gain computation will happen and the indexation will happen as per 2020-2021. Clear? Then cost of acquisition तो वही होगा जिससे आपने अपना actually property acquire किया या bill किया. Is it clear? अभी तक compensation में कोई doubt? Sure? Okay. Now, यहाँ पे some various case scenarios develop. Please listen carefully. See that if you will read your study material, you will not understand it. Now, suppose you were not happy with the compensation. आपको किसी ने आके बोला भाई ये तो property 1 crore की है, you gave it only for 50 lakhs to the government. How could you agree it? So and so thing. You were not happy with the compensation. ठीक है? September 2021 में ही someone came and said to you when you received the first installment, said क्या कर दिया and all that, and then you go to the court. Then you go to court and you say to court कि I am not happy with the compensation I received. It should be reviewed. It should be reviewed, and you get a 21 financial year 21-22 में you have given the taxability as to 50 lakhs. Okay. Now आपको कोर्ट ने क्या किया? कोर्ट ने आपका सुना, they took market factors, they took circle rate and everything in consideration, and financial year 22-23 में they said कि more amount should be given to you. So April 22 में they passed the order and they said कि 10 lakhs extra और देना चाहिए. Okay, 10 lakhs extra should be paid to you as compensation, and that you received in June 2022. Now what will happen? You have received more compensation. So that additional compensation part which you have received on appeal or order, that is called enhanced compensation. So suppose I have received 10 lakhs more. So 10 lakhs is my enhanced compensation. Now what will happen? Will you revise your return for 21-22? Because यहाँ पे तो you have shown it. Here you have shown it and offered to tax. What will you do? Whether full value of consideration would change to 60 lakhs? No. The year has closed, everything is closed. This would be 50 lakhs only. Now 22-23 May, you will offer this 10 lakhs to tax. Offer this 10 lakhs to tax by taking full value of consideration as 10 lakhs. Less cost of acquisition, which would be nil. Why, ma'am? Why nil? And hence 10 lakhs pay you will pay capital gain. Why nil? Because cost of acquisition ka benefit already in full you would have been taken when you have computed the capital gain as per 50 lakhs. When you would have computed the capital gain as 50 lakhs, you would have already taken the cost as deduction, correct? फिर से next year में deduction same cost पे लेना is not allowed. Hence, the enhanced compensation के time पे when it is received, the full value of consideration is the enhanced compensation received, but the cost of acquisition would be nil because deduction have already been claimed. Deduction have already been claimed. But yes, whatever litigation expenses which you have taken to go to court to hire the lawyer and all those things, that would be allowed. That would be allowed. So litigation expenses would be allowed, but no other element would be allowed because cost of acquisition का तो आपने पहले deduction ले लिए. Already when in financial year 21-22, when you were computing the capital gain, you have already taken that deduction ka benefit. The same cost ka, how will they give the benefit again, right? So that's why no cost of acquisition in case of enhanced compensation, and litigation expenses ka deduction surely you will get. यहाँ तक किसी को डाउट? Because एक और small element है, then we move forward. Clear? Anyone has any doubt up till now? Yes, the valuation summit generally is offered by the compensation is generally offered by the government. Yes, enhanced compensation also would be taxed in the year of receipt. If litigation expenses are paid by government ने आपको compensate कर दिया litigation expenses के लिए, then you will not claim it as deduction. Why? Because that has been compensated. Vanati, Himanshu, is it clear? Shruti, Sumesh. Pradeep, I will definitely come to your question. Just wait for another part of the class. This will be answered. 10 lakh the compensation would be taxable in the previous year, 22-23, which would be my assessment year 23-24, in which year it is received. Students, I know capital gain can become a bit overwhelming because it is not an easy chapter to understand. Simply saying this minus this and do this would not help you. I hope everything is getting clear step by step. That's why a bit shuffling is also done as per the flow of modules so that you can understand it. In case you do not understand it, please let me know. We'll try to take a better thing, but I know there are lots of new concepts and technical concepts which are coming in. Okay, so please let me know accordingly. Sundar, definitely you will get there. Compensation in first year is less than the tax amount. Sushila, I did not understand your question here. If compensation की वजह से loss is coming, that is okay. That is not a problem. Because no indexation of enhanced capital because we received it 1 year later, Baba. Indexation का तो concept ही नहीं आएगा because cost of acquisition is already claimed earlier. So when there is no cost of indexation, cost of acquisition, then there is no indexation. Okay, Ankit, I'll tell that part. Okay, so here only in this question, till the time there is no enhanced compensation, you will take 50 lakhs as your full value of consideration, less cost of acquisition. Cost of acquisition would be the value at which I purchase the property. Suppose I purchase the property in 15 lakhs rupees. Year of transfer would be CII of 2021 divided by CII of cost year of acquisition. Suppose I purchase it 10 years back, the CII of say 2010-11. But everything would be offered in year 21-22. Only the heading of the year is changing. This is not changing. Simple. Then in next year, when you come in next year, full value of consideration 10 lakhs, no cost of acquisition, litigation expenses, yes, and you will come to capital gain. The question which you must ask here is, ma'am, what would be the nature of this capital gain? It would be the same nature in which the original compensation was taxed. If this compensation was of long-term nature, here, if the capital gain was of long-term nature, this would also be of long-term nature. If here the capital gain is of short-term nature, this would also be short-term nature. This question is what I was looking for. But yeah, is it clear now? Government will make Harshit definitely the remaining installment. सुशीला देवी, that would I understand your pain point कि okay सिर्फ 10 lakhs दिया and capital gain also came of rupees 30 lakhs and उस पे tax बन रहा है 10 lakhs का, that I understand, but enhanced compensation के case में compensation के case में taxability will arise from the year when first compensation was received, and it will not be that minimum of just 50,000-60,000. It would be a good installment practically. Ankit, is it clear? Harshit, is it clear? Sure. Compensation is if reduced by the court. Very smart question, Ankit. Agar compensation court ne reduce kar diya, first of all, you will curse yourself. But yeah, if the compensation is reduced by the court, then you revise or if the revision period is there, then you revise the return. Otherwise, there's a concept of rectification. Rectification of return would happen, and that would happen as per section 155. ठीक है, रेक्टिफिकेशन क्या होता है, हाउ डज इट हैपन, वेट फॉर योर फाइनल लेवल्स, यू विल गेट टू नो इट. ओके, इनकम टैक्स में स्टूडेंट्स एक प्रॉब्लम है, द कोर्स इज ह्यूज बट इट इज वेरी इंटरेस्टिंग, एंड अभी तो यू हैव वेरी लिमिटेड कोर्स, बट व्हेन यू गो टू फाइनल लेवल extreme concepts are there, extreme concept. So if you will ratify everything, nothing would be clear. So take step by step and you will get the right hold of it. Any other query? Shall we move forward now? Wait. Acha, one thing, last thing which can come here. वैसे at your level, it will not be very complicated, but yeah, you never know what institute asks, right? So एक होता है interim order, one is interim order, one is final order. What is interim? Interim is, it's not a final order, but just being passed for the sake of basic knowledge which came from the act, and then there's a scope of change in it. There is a scope of change, seeking timelines, and interim order is passed, and then comes the final order. If court orders anything on interim order, enhanced compensation came, but it came in interim order. Interim order is not the final order, it's just an order which is passed during the proceedings. Then you will not consider anything until a compensation is final as per your enhanced compensation is ordered as per your final order, then only you will take the thing. Otherwise, you will not take anything as per the interim order. Okay, so your module also says the same thing. Any amount of compensation received in pursuance of an interim order of the court or other authority shall be deemed to be the income under the head capital gain of the previous year in which the final order of the court comes. So until and unless the final order comes, then only you will take that income. Clear? But this again is not very important at your level. Next student, next exception and the last exception which is applicable at your level and is also important. If you understand it, I'm telling you, you can make it understand to a final level ka student, because they also do not have a clarity on it. Section 45 5A joint development agreement. If you reside in North India, there's a concept of builder. West India, I think there are lots of flats in society, so maybe this concept is not there. I think down south, I don't know how it happens, but yeah, North India, there is this very interesting concept, builder. बहुत builders हैं, extreme builders हैं यहाँ पे. What do they do? Think yourself as a person, Mr. X. ठीक है, you have a land or you stay in a house. One floor house है आपके पास, पुराना constructed house है, and आज के date में no one has time to deconstruct or demolish everything, then construct everything from starting, get all the municipal approvals, get all the fittings done, get all the material, rush here, rush there, rush to this department, rush to this market, that market, right? So you don't have that much time. You are Mr. X. What you have this building, okay? Please listen carefully, very important. Because yahan pe, if you will understand, you will answer yourself all those things. What you do is, builder क्या करता है, sorry, Mr. X क्या करता है, he finds a builder or developer. He finds a builder or developer. Sorry. ठीक है, and he says, I am residing in a ground floor, first one floor का building है. This is my land, my building. Mr. X का land, Mr. X का building. He goes to builder, एक agreement होता है उनमें. He says, deconstructed, build a house for me. Up material, everything, sarkhapai, everything would be yours. By end of it, you furnish me 3 floors. 1 floor, 2 floor, and 3 floors. 3 floors मुझे आप building के दोगे बना के, ठीक है? I'll make it easy. Sorry, bad drawing. You give me 3 floors of building with all approvals. ठीक है? Build this house for me. Okay. This is what happens. Now you will ask, ma'am, builder को क्या मिलेगा? Builder will be applying all the raw material, all the labor costs, all the municipal costs, everything, electric fittings, furniture, paint, everything which you think of in developing the house, from cement to the final finishing touch of paints and all. So builder will spend a lot of amounts. What will builder get? Mr. X says, okay, what will happen is, as a builder, you take 1 floor, you give me 2 floors. Builder पूरा flat build करने में somewhere around 2 crores लगाएगा, उसको एक 3 crore का flat मिल जाएगा. He is in profit. ठीक है? He, as a consideration, builder will get this 3 crores. Builder will get this 3 crores. अभी तक कोई doubt? Mr. X will get this 2 flats built. Mr. X will get this 2 flat built, this and this. तो क्या हुआ? एक house जो था, that would now be built by builder, and builder will take 1 flat, 1 floor with him, and he will give the other 2 floors to him by proper construction of building. 2 crores ka he will spend, and he will might get a flat which is of 3 crore value, so he's in profit, no doubt. And Mr. X को क्या हुआ? बैठे बिठाए, the land is built. Any query up till now? This is just a story. Now the question comes, there were lots of problems. Many courts were saying transfer has happened, builder is receiving, Mr. X is also receiving, but no one knew what is happening. When is transfer happening? What is full value of consideration? No one knew, right? No one knew. So now let's think yourself as Mr. X. अब house तो एक दिन में नहीं convert होता. I approached, you are Mr. X, you approached to the builder in financial year 18-19, build a flat for me. So generally they take a time from 18 months to 24 months to build a flat, because obviously they will deconstruct it, they will construct it again, so they take 2 good years. So they say, okay, मैं 2 years में आपको सब बना के दूंगा. I will give you it in 2 years. Okay. Now the question comes, Mr. X, through a joint development agreement, has given the whole right to the builder. When does the transfer happens of this house, which is this chota sa house, on the same land? When does that happen? In financial year 18-19, right? In financial year 18-19, I give that house to the builder to develop, right? So the transfer happens in 18-19, because now this asset is extinguishing and now a new asset is coming into place. So transfer has happened. Correct? Yes. We all agree on it? Yes. But year of transfer is 18-19, but what would be the year of taxability? Am I getting anything in 18-19? Mr. X को 18-19 में कुछ मिल रहा है. You are Mr. X. Are you getting anything in the year 1890? No, your house is going. आप थोड़े time के लिए you will might stay in a rented place or some other house which you have. But am I getting anything in return in 1890? No. When I will get in return, these 2 flats I will get in return. When I will get in return, when they are built, when they are properly built, when a certificate of completion is issued, when a certificate of completion is issued, hence my year of taxability, would be the year in which I get that house or the certificate of completion, these 2 flats. So hence the certificate of completion when issued that would be the year of taxability. Transfer has happened, and here again, students, I'm saying again and again, we're not talking about these assets. These are not my asset in question. This house is my asset in question. This particular house is my asset in question. So the year of transfer would be 1890 when the possession is handed over. But the year of taxability would be the year when the certificate of completion is issued by authority. Correct? Yahan pe, if you have to understand this concept, first understand what is my asset in hand. It is not this new building which would be built in the same land. It is this house which I had, the building which I had. So that is the asset which is outgoing. That is the asset which is transferred. That asset is transferred when the possession is handed over. When the possession is handed over. But taxability will happen when I'm getting something in return, which is these 2 things. When I'm getting these 2 things in return, when the certification of completion is issued. Hence, my year of taxability is deferred and would be the year when certification of completion is issued. Ab beech mein COVID aa gaya, things happen, and finally the house got completed in 21-22. So year of taxability 21-22. Koi doubt ab tak? So now let's assume the building which was transferred in 1819 was purchased for 10 lakhs. So the cost of acquisition 10 lakhs. In the year 2005 and 6. Okay. Now 1819 tak he transfer hoga. What happened? What would be my full value of consideration is what your next question should be in this scenario, right? What would be my full value of consideration? What am I getting in return? These 2 flats. What am I getting in return? These 2 flats. So whenever we are talking about building, we do not refer to the term fair market value, we refer to the term of stamp duty value. So the stamp duty value of the portion received would be my full value of consideration, because think logically, for giving up this, I got this. For giving up this, I got this. So stamp duty value of the portion received on which date? On date of completion, when the certificate of completion is given. So when certificate of completion is issued, us date pe whatever the stamp duty value is, that would be my full value of consideration. That would be my full value of consideration. Agree? Nothing to ratify. Think yourself as Mr. X. You gave it the building. You got these 2 lands. This building is getting transferred. Now this is demolished. What did I get in return? These 2 flats. So these 2 flats, the stamp duty value would be my full value of consideration. Do not assume the asset in question as these 2. Otherwise, you will get confused. The asset in question is this. Okay. Year of taxability is 21-22 when the certificate of completion is issued. Year of transfer is when the land or the building was transferred to the builder. Koi doubt? No. So less cost of acquisition, which is 10 lakhs, into year of transfer ka CII, which is financial year 18-19 ka, into CII of 5-6. And period of holding would be from this period to this period. Any doubt up till now? No. Now, this would come as my capital gain, long term, short term. All of this will happen in 21-22 when the certificate of completion has been given. Clear? Any doubt? Ye clear hua? Take yourself 1 minute to absorb it and let me know. Acha, good to know we have the concept same. Thank you, Abhinay. Nalini, tax rate पे भी आएंगे. Last class will be about tax rates. अभी तक this builder concept clear. अभी we'll see builder के लिए क्या हो रहा है. We'll see all that. Mahadev, there is no cash inflow. I agree. There is no cash inflow, but what you are getting in return is those flats, no? That flat is your inflow. That flat is your inflow. Jameel, Jameel, listen here. हमारा asset कौन सा जा रहा है? This asset, which was this house, is getting transferred. Not, and what I'm getting in return is these house, the flat 1 and flat 2. Flat 3 is with builder. Okay. So my full value of consideration for this is what I have got in return. What I've got in return is these 2 flats. So the stamp duty value of these 2 flats would be my full value of consideration. Clear? हो भी सकता है builder इसके साथ, if you think कि I'm not getting the actual amount, builder may also give some cash again. He say, okay, you take these 2 flats and I'll give you 20 lakhs in cash. That 20 lakhs also would be your full value of consideration. This actually happens. So today sit with your father or anyone who is into the same business and understand with them कि होता यही है. They give them land to build, area to build. He spends 2 crore. He takes his share of profit. By estimating, he spends only that much. A builder only spends that much of what he is getting in return. अगर उसको flat in return hardly 1 crore का मिले, not spend 2 crore from his pocket. Okay. So, and he gives some cash and some floor back to the person to whom the possession was taken from, and that becomes full value of consideration. Whatever you are getting in return of this house, would be full value of consideration. That could be 1 flat, 2 flat, some consideration additional in cash. Everything together would be a full value of consideration for this house. Abhi, I'm not coming to these houses. I'm talking about this house. That's why I'm saying again and again, please take your asset in mind, that which asset we are talking about. Jameel, is it clear now? Mahadev? Good. Pooja, is it clear? Whatever you are receiving in return is your full value of consideration. Transfer happen when you give the possession to the builder. So Shubham, up till now we were discussing about, I think I joined late, yeah. So up till now we were discussing about the exception to the general rule of taxability, because we say taxability happens in the year of transfer, but in these particular cases which I've discussed, taxability happens when something is received in return. In case of insurance claim, when the insurance claim amount is received, in case of stock conversion of stock in trade, capital asset into stock in trade, taxability happens in the year when stock in trade is actually sold further. In year of in case of compulsory acquisition, taxability happens in the year of when the first installment of compensation is received. And in case of joint development agreement or specified agreement, year of transfer is when the possession is given, but taxability happens when you receive something in return, which is when the flats are completed. So certificate of completion when issued, that would be your year of taxability. Cost of acquisition is the price. उसके लिए whatever indexation you are taking and period of holding के लिए whatever period you are considering, obviously that would be the same. Yes, here Himanshu, you can say the full value of consideration would be in kind, which would be the flats, and in cash also if given. Prabhas, I'm coming to that. First, is it clear? Now, last concept. Mr. X gave this house, okay, and builder paid this house, right? Mr. X got for this house this and this part. This is right. Now, Mr. X has 2 flats. There is no more building here. Now, Mr. X has 2 flats. We understood when will this happen. When will the capital gain of this will happen and how will this happen, right? Now at present you are Mr. X in financial year 21-22. What do you have? These 2 flats. So now in future when you sell these 2 flats, it would be different. I may sell one because I might live only in one flat. I may sell another flat, right? I may sell another flat. Now what is the asset in hand? This, no, iska story khatam. What is the asset in hand? Now the assets in hand are these 2 flats. What would be the cost of acquisition? What would be the cost of acquisition? The stamp duty value, on which I have already offered tax as full value of consideration earlier. That now would become my cost of acquisition for these 2 flats. That now will become my cost of acquisition for these 2 flats. Stamp duty value on which date? On date of issuing of certificate of completion. क्या जा रहा है, कब आ रहा है, किस वैल्यू पे आ रहा है? See that. I got these 2 flats, ठीक है, and I offered it to tax by taking stamp duty value. इस पे मैंने income tax दे दिया ना, right? Now I can claim it as cost of acquisition when I further sell these 2 flats. When I further sell these 2 flats, builder के लिए this flat is received. Builder is getting this flat. For him, the cost of acquisition would be the amount which he has spent. The amount which he has spent, and full value of consideration would be the stamp duty value of this. Simple. Clear? So, but for you, the question of 45(5)(a) applies only up till the situation which is this. 45(5)(a) applies only to this particular house, not to these 2 houses. Next time when you're selling these 2 houses, you have to see how you are selling it. But 45(5)(a), which is joint development agreement, happened only for this house. Okay? Clear? Any doubt? Okay, so with this, I'll give you some break. We'll join back in 8:40. We'll start with some very, very technical concepts of amalgamation demergers. So please come back in time and we'll start. Okay, take a break, revise the concept, have something to eat. We'll be back. So welcome back everyone. We were discussing about exception to the general rule of the year of taxability. We discussed from section 45(1)(a) where we talked about insurance claims. Insurance claim में year of taxability would be deferred to the time you receive the insurance amount. Full value of consideration would be your insurance claim. Second is your, all the indexation would happen till the year of transfer, which is when the asset was demolished, destroyed, or destructed. Second is section 45 subsection 2, where we talked about your conversion of capital asset in the stock in trade. Year of taxability differs to the year when the stock in trade is actually sold. When the stock in trade is actually sold. But my year of transfer would be that conversion. Hence, the full value of consideration would be the fair market value on the date of conversion. Fair market value on the date of conversion. Cost of acquisition, we all know. Period of holding would be till the date of transfer, which is conversion date. Then we moved ahead and we saw about compulsory acquisition. Compulsory acquisition may your period of taxation would be deferred till the time you receive first installment of your compensation. Once you've received your first installment of compensation, the entire compensation is offered to tax as full value of consideration, and the year of transfer is the year of compulsory acquisition, but year of taxability is the year when the compensation is received, first installment is received. In case of enhanced compensation, if received later, there would be full value of consideration would be enhanced compensation, but your cost of acquisition would be nil because you would have already taken the benefit of the same when you were offering the initial compensation. Litigation expenses you get as deduction. Then we saw about your last, which is joint development agreement, where the year of taxability of is deferred to the point when you receive something in return. That is when these flats are received or when the flats are completed, the certificate of completion is issued. The stamp duty value of those two flats would be a full value of consideration along with any cash which is received from builder. Clear? But the year of transfer would be the year when the possession is handed over. So this was all about the previous 1 hour which we discussed. Anyone has any query before we proceed further? Perfect. Now we move forward, students, to certain scenarios where transfer is there, ownership is getting changed, asset is getting changed, everything is happening, but it is not transfer as per the law. It is not a transfer as per the law. That is, it's an exempt transfer. It is a transfer, but it is an exempt transfer. It is not a taxable transfer. Again, what did I say? You will see the asset is getting changing its shape or the ownership is getting changed. But there are certain situations which will not be regarded as transfer. So hence, these are the cases of exempt transfer, section 47. First case is, everyone please on the screen, when a partition of HUF happens. Partition of HUF happens and capital assets are distributed to the members. So any distribution, HUF का capital asset था, now it will become the capital assets of the member. Ownership has changed. Ownership has changed. HUF say now the ownership has been changed to members. Still, this transfer would not be taxable in the hands of HUF because it's a exempt transfer. But what will happen? We are doing section 47 and 49 together. Please listen carefully. What will happen? For member, he has now received the asset. He has now received the asset. अब वो जब actual taxable transfer करेगा, अब when member actually sell that transfer or sell that asset, then we have to see what implications will come. Think yourself as member. You got an asset from HUF. HUF के hand में nothing is taxable because it is an exempt transfer. Taxability कब आता है? When there is a transfer, right? But it is an exempt transfer, so in hands of HUF, nothing would be taxable. Nothing would be taxable. But if as a member, you now transfer it. Ab suppose karo you received house property as from HUF. Now, when you have received it, HUF is the person who is the transferor. Nothing would be taxable to him. Now, house property, when you further sell it, then taxability would come, might be in your hands. In your hands. How the taxability will come in your hands? Listen carefully now. For you, full value of consideration would be whatever at which price you have sold. Okay. What would be the cost of acquisition? What would be the cost of acquisition? As a member, think yourself as a member. Did you pay anything? As a member, did you pay anything to get that asset? I repeat, as a member, did you pay anything to get that asset? The answer is no, you did not pay anything. So what would be the cost of acquisition? The cost of acquisition would be, यहाँ पे concept and term which we use is cost to the previous owner. The technical term which we use is cost to the previous owner. And what do we mean by previous owner? Previous owner is the person who has actually paid the price to acquire the asset. Who has actually paid the price to acquire the asset. Cost to the previous owner. Previous owner is the person who has actually paid the price to acquire the asset. Clear? Period of holding. आपके लिए period of holding कब से start होगा? For you are the member, your period of holding would be from the date when you have held it? No. To see whether the asset is long term or short term in case of exempt transfer. When an asset is received and the transfer was exempt when it was received, this person has to see the period of holding by including the period of this person also. That means period of holding would be the period held by the assessee. The period held by the assessee plus the period of previous owner. So in a way, you can see, instead of breaking the taxability here and here, the entire taxability is coming in the hands of member when he actually sells it. When he actually sells it. But he will be getting the benefit of cost of acquisition, which otherwise HUF, if HUF would have transferred otherwise, other than partition, would have claimed. He will get the benefit of period of holding. He will get the benefit of period of holding. He will get the benefit of cost of acquisition. And along with that, indexation benefit would also happen. Indexation would also happen. How will indexation happen? Indexation will happen from the period. Think yourself as a member, okay? So from the period, cost of acquisition क्या आएगा? Cost to the previous owner. This is clear. Indexation period of holding जो ले रहे हो उसी का indexation लोगे. So here obviously would be the year of transfer by member, and here it would be year when acquired by previous owner. When acquired by previous owner. This is the point to remember. Example के साथ करते हैं, but not in this case. HUF नहीं लेते, gift लेते हैं, ठीक है? Do not worry. Next is gift. When a property is given as gift or anything received as gift or under will or as an irrevocable trust, that comes also as exempt transfer. Now, Mr. A transferred the property to Junior A, his son. in a will. Junior A then transferred. ठीक है, पहले यहाँ तक करते हैं. Junior A son को property मिल गया. Junior A son को property मिल गया Mr. A से. Mr. A had acquired this property in 2008-9. Junior A received the property in 2015-16. And Junior A sold the property to Mr. J in 2021-22. Okay. Now, Mr. A, when transferred the property to Junior A, is an exempt transfer because property given as gift. Property given as gift is an exempt transfer. Ownership has changed, everything has changed, but it is an exempt transfer. So nothing taxable in the hands of Mr. A. Now come to Junior A. Junior A, when received the property, it's under gift. There is a relation we'll see other sources में. Gift में कुछ मिलता है तो what happened? But Junior A, when receiving the property, nothing would be taxable in his hand also. Okay, when Junior A received the property, nothing would be taxable. Now, Junior A sold this property to Mr. J in 21-22 for 50 lakhs. Now, let's self-answer the few questions. What is full value of consideration? Taxability will happen when? In the year 21-22, because when the property is actually sold. Mr. A, when selling it to Junior A, nothing is taxable, okay? Because it is not a transfer. Full value of consideration, 50 lakhs. Less cost of acquisition. अब यहाँ पे आएगा मजा. Less cost of acquisition. Did Junior A acquired it for some cost? No. So when you receive any property or any asset through exempt transfer, when you as a Junior A receive any asset or property through exempt transfer, the cost of acquisition in that case is cost to previous owner. Cost to previous owner, which in my case would be, suppose Mr. A had acquired this property for 10 lakhs. So this in my case would be 10 lakhs. Now, CII of year of transfer. Transfer happened in which year? 21-22. Transfer happened in which year? 21-22. So 21-22 come, I took 317. Now, period of holding. First period of holding actually should have been taken. Period of holding would be the period when the transfer has happened. It will end on the period when the transfer has happened, which would be 21-22, but will begin from the period of the previous owner. That means from 8-9. So obviously it's a long-term capital asset. It's a long-term capital asset. Here also indexation में आप क्या करते हो? CI of transfer divided by CI of acquisition. CI of acquisition. But here the CI of acquisition of whom? Of the previous owner. And who is the previous owner? Who has actually paid the price? Who has actually paid the price for that asset? The CI of acquisition of the previous owner, that means 8-9 ka CII, which is 137. So my capital gain here would be ₹26 lakhs 86,131. This would be my capital gain. Now let's take another example, then I'll take it out. Mr. A has transferred a property through will to Junior A. Junior A transferred that property to Junior 2A junior A, whatever you want to say. Junior A sold the property to his friend Mr. M. Now, what will happen? Mr. A, when transferred he acquired this property in 2005-6. He transferred this property as will in 2015-16. Junior A got this property in will in 2020-21, and he sold this property in 21-22. Now, what will happen? Let's see from the point of view of Mr. A. Mr. A in year 2005-6 is no more the owner. He transferred the property through will. Will this be a taxable transfer? The answer is no. Nothing would be taxable in the hand of the transferor, which is Mr. A. Okay. Now, Junior A. Junior A has received the property. He transferred the property through a route which is also an exempt transfer, through will. So now, who is the transferor here? Junior A is the transferor. But since he has transferred the property, which is through a transaction which is not regarded as transfer, nothing would taxable in Mr. A hands also in 15-16. Now, Junior 2A got the property in 2020-2021. He got the property in 2020-2021. Okay. Now, he is selling the property to Mr. M 21-22. Who is the transferor? Junior 2A is the transferor. Has it transferred the property through the meaning as per section transfer? Yes. Section 247 में he has sold the property. Is the transfer not exempt? Yes, it is not exempt. It is a taxable transfer. Now let's see the calculation. What is the full value of consideration? The price which is received from M. Correct? Now, period of holding. Period of holding would be from 2021 to 21-22? No. Period of holding will begin from the period when the previous owner acquired the asset. Previous owner acquired the asset. Previous owner acquired the asset. Who is the previous owner? Junior A or Mr. A? For Junior 2A, who is the previous owner? Mr. A. Why Mr. A? Because I told you previous owner is not immediate previous. The previous owner means the person who has paid the price of that particular asset. So Mr. A is the previous owner. Hence, period of holding will become from this year to 5-6 to 21-22. Hence, it's a long-term asset. Cost of acquisition would be the cost to the previous owner, which is cost to Mr. A. Then, what would be the CII? CII of the year of transfer, which is 21-22. And CII of the year when the asset was first purchased by the previous owner. The previous owner purchased it in 5-6. Okay. So hence, now you will calculate the capital gain. Simple. Now, students, there are multiple laws which said that, multiple judgments which said that CII should be taken for the period when the asset is first held by assessee. But there's a case of Manjula J. Shah of Mumbai Court where they say CII would be of the year when the asset, CII would be of the year when the asset was acquired by the previous owner. So you will always say we will take the CII of the year when the asset was acquired by previous owner. Okay? Any doubt? Okay. So with this, we are doing both cost, section 49 and we are doing section 49 and section 47 together to help it understand better. I know Prabhas has deliberately left section 46, 46A. Okay? Muskan, is it clear? Yeah, Pooja, yes, the gift is also applicable in case of property inherited. Any that is through will. So any property transferred through will, through gift, would not be taxable in the hands of transferor. Clear हुआ? Muskan, is it clear now? Short question आएगा. Make a chart for your own that who is the previous owner, and previous owner is the person who has paid the price for that asset. Preeti, is it clear? You want to note this example? Take a minute and note. बस इसमें एक गिफ्ट एक्सेप्शन है जो ESOPs का है. ESOPs का full taxability will explain in the next class. ठीक है? So now if I say again here, as per section 47, Mr. A is exempt from paying capital gain because he has made an exempt transfer. Mr. Junior A is also exempt from capital gain because he has made an exempt transfer as per section 47. Junior 2A has made a transfer as per section 247, which is not exempt under section 47. Hence, Junior 2A would pay capital gain ka tax. Capital gain ka tax, how will he pay? The amount which is received, which is full value of consideration, and the cost to Mr. What would be the cost of acquisition for Junior 2A as per section 49? The cost of acquisition would be the cost to the previous owner. Cost to the previous owner means 1, 2 here. The cost to Mr. A. And see, a period of holding would obviously begin from the period when the previous owner has first held the asset. Clear? If property, Vanati, very good. If the property has brought by A in 1970, then what will happen? Then you will take fair market value as on 1st April 2001 or the cost of acquisition of 1970, whichever is higher, or whichever is, I should say, whichever is beneficial to assessing. Muskan, transfer is 2122. Why? Because यहाँ पे भी transfer has happened, but these are exempt transfer. The जो हम section 47 पढ़ रहे हैं, where they say that section 47 would include the transaction which would not be regarded as transfer, even if ownership is getting changed, even if the asset is getting changed, still the transaction would not be regarded as transfer. Okay? इसलिए year of actual transfer is when it is not an exempt transfer, which is as per 2122. करेक्ट वानसी. आपको सी यहाँ पे आपको कॉस्ट ऑफ प्रीवियस ओनर लेना है. क्यों? कॉन्सेप्ट क्या है? क्योंकि जो कॉस्ट कभी इनकम टैक्स में डिडक्ट ही नहीं हुई, दैट यू विल टेक ना, दैट यू विल टेक with the benefit of which was never given to income tax either to you or any person before that. You will take that cost, and that cost can be as per the same concept of either FMV or the cost to the previous owner, whichever is higher. ठीक है? And taxability again, जो period of holding कभी taxation के लिए आया ही नहीं, that period also you will take. Sumesh, better, good, good. ठीक है? Clear? Okay. Now let's move forward. One second. ये वाला part, students, this part you will not understand because this part we'll do it in ESOP वाला thing. ठीक है? Next is the next part which they say is when the asset is transferred from the holding company to subsidiary company, wholly owned subsidiary company. Wholly owned subsidiary company means 100% subsidiary company. Now you will say, ma'am, 100% कैसे हो सकता है? At least 2 shareholders are always required. When 99.99% shares are held by holding company and 0.1% by a nominee person, who ultimately is a nominee of the holding company, that is called 100% holding company. Okay? So when this is your accounts concept. So when holding company transfers anything to 100% subsidiary company, or when 100% subsidiary company transfer any capital asset to holding company, that is also not a transfer. That is also not a transfer. That is also an exempt transfer. Exempt transfer. So exempt transfer में क्या होगा? When the ultimate person, if he sells as per the transactions which are not mentioned, he will pay the tax and he will take the period of holding of the previous owner. He will take the period of holding of the previous owner, cost of acquisition to the previous owner. Okay, but holding transferring anything to subsidiary company or subsidiary company transferring anything to holding company, 100% holder subsidiary company would not be taxable at transfer. Only thing which you have to remember in both the cases that the transferee in either cases should be an Indian company. Should be an Indian company. So the transferee should be an Indian company. Just remember this. Also, we are talking about the capital asset. If the capital asset transferred by holding company to subsidiary or subsidiary to holding becomes stock in trade in another company, then it would be a taxable transfer. It should not become a stock in trade in another company. Capital asset should go from here in the form of capital asset to the other company. By saying again and again, I'm saying, student, this is not a transfer. That means the transferor do not have to pay tax on it. On such transfer, the transferor do not have to pay tax on such transferor. But when the transferee who is receiving the asset further sells it, then we have to see whether he has sold it through taxable transfer route. If he has sold it through taxable transfer route, then we'll see cost to the previous owner, period of holding of the previous owner to calculate the tax in the hands of the transferee who actually now transferred the asset. Okay? Clear? Any doubt? Amalgamation, demerger, students, I'm pausing it for a minute. यहां तक पहले किसी को कोई डाउट? Where is probate लिखिन वनति? Swati? Then 9, 10 you can choose to skip. That is not very important at your level. 11. Redemption of sovereign gold bonds by an individual. Sovereign gold bonds are assets. Yes, they are assets. They are capital asset. Indexation happens. Yes, indexation happens. But individual ki case mein, only in case of individual, when they redeem the sovereign gold bonds, that would not be a taxable transfer. That means individual the gold bonds ko mature karenge by selling back to the RBI and they get the money. That would not be taxable in the hands of individuals. That's why when gold bond schemes come, people purchase in it because anything which appreciate, any gains ultimately would not be taxable on maturity. Would not be taxable on maturity, but only in case of individual. If a gold bond is purchased by an HUF and that is redeemed, HUF has to pay tax on it. But you are an individual who got gold bonds, now they are redeemed, nothing would be taxable. Nothing would be taxable. Clear? Then generally when you transfer these assets, to government or university, some archaeological collection which you found, some book, some drawing, government will give you compensation for it. Now who is the fresh owner? Government. Who is the transferor? You. But nothing would be taxable in your hand. It would be an exempt transfer. You do not have to pay any tax on such transfer. One second, Sumi. Next, three important transfer which is applicable for you. Everyone on the screen, please. आपने concept सुना convertible bonds? What are convertible bonds? Convertible bonds are bonds which after a certain period converts themselves into equity shares of a company. Bond, yeah, into some other bonds or debentures. So convertible bonds or debentures means who convert themselves into equity shares or other debentures of the company. Now think yourself as Mr. X. Mr. X has 100 convertible bonds at ₹1,000 each. Okay? Now, after 3 years period, these bonds were converted into equity shares. Now of X Limited. And now this person has 1,000 equity shares of 100 each. Of face value of 100 each. And this person sold these equity shares. At ₹150 each. So the moment they got converted in financial year 21-22, immediately the next day he sold those equity shares. Now you are Mr. X. What asset you had in hand? जिसके लिए आपने price pay किया था? You paid the price of 1,000 into 100, which is 1 lakh, for getting those debentures, right? अब ये debentures चले गए. These debentures are gone and converted into equity shares. You got equity shares. The asset has gone, which you actually purchased, but now you have equity shares. Now what do you have? Equity shares. So this conversion of one asset to another, even if as per definition of section 247 appears to be a transfer, but it is an exempt transfer. It is not a taxable transfer. So in your hand, this conversion would not be a taxable transfer. Clear? Yes? Okay. Now, what do you have in hand now? Equity shares. You sold those equity shares immediately when they were converted. The very next day you sold them. Now the question comes, वही 3 question बार-बार खुद से पूछने, cost of acquisition, period of holding, full value of consideration. Now equity shares का full value of consideration क्या हुआ? What would be the full value of consideration? 150 into 1,000. Correct? Cost of acquisition क्या हुआ? You have equity shares. What would be the cost of acquisition? The cost of acquisition would be the cost of debentures, because of that or the convertible bonds, because of those you have received that equity shares. For that equity shares, what actually price you paid? This 1 lakh only, right? अब वो आज equity shares हैं, but you had paid only 1 lakh. Period of holding. Period of holding will start from the date when you purchase the debentures or convertible bonds. When you purchase the convertible bonds. Now, if it's a listed company ka share, it would not be getting taxable as per 112A. If it is non-listed, then you will index it. Index it how? Simply CII of the year of transfer, which is 21-22, and CII of year of acquisition. Period of holding start कब से हो रहा है? Debentures के period से. When you got that convertible bonds. When you got that convertible bonds. So 3 years पहले वाले period से we are starting. So hence period of holding would begin from the period when the bonds are purchased. Cost of acquisition would be for the bonds. Indexation, if happening, would be for the bond. Would be from the period of bonds. Any doubt? Very good, Preeti. किसी को कोई doubt? Sure. Very good. Thank you. Then now, just like convertible bonds, your preference shares are converted into equity shares. Same thing will happen. Same thing will happen. Preference shares जब जा रहे हैं and equity shares जब आ रहे हैं, that is not a taxable transfer. That conversion is not a taxable transfer. But when you actually sell that equity shares, you have to take the period of holding from preference shares, the cost of acquisitions of preference shares. Now let's understand another important concept, reverse mortgage. इसके लिए आपको story फिर से समझना पड़ेगा. Small story time. What is reverse mortgage? And why it is called reverse mortgage? And why it is in the list of exempt transfers? Everything we'll see now. Everyone on the screen, please. Mortgage में क्या होता है? When you put anything on mortgage, general loans में क्या होता है? They give you the lump sum in your account, and then as per EMI you pay them. Correct? It's what happens when we talk about the term mortgage. What is reverse mortgage? Reverse mortgage is a concept only for senior citizen. There's a reverse mortgage scheme. There is a senior citizen who are all by themselves. Okay? They do not have any source of income. We are talking about senior citizen in the age of late 70s or 80s who are all by themselves. They need, and they do not have children, or the children do not take care of them, or whatever the situation. Then to make them independent for running the house, for having medical expenditures, make them their needs, the government came up with the scheme of reverse mortgage. Reverse mortgage में what will happen? If senior citizens have house, उनका खुद का एक घर है, ठीक है, लोन फ्री घर है, they have one house, they will go to bank or any NBFC, ठीक है, they will give this house to bank. They will give this house to bank. They transfer the house to bank. Bank के पास house आ गया, and bank will now either give them lump sum if they require, or will give them every month some amount for the maintenances and running. ठीक है, 60% is house का value, 60% house के value का they give them lump sum as per the scheme, or monthly annuities, monthly, quarterly, जैसे उनको सही रहे, to maintain themselves. ठीक है, to maintain themselves. Now you will say, ma'am, how the loan has to be repaid? how the loan has to be repaid. इसमें यही तो है, there is no repayment of loan. वो लमसम इतना देते हैं जितना हाउस से निकल जाए, और एन्युटीज उतना देते हैं जितना हाउस से निकल जाए. जनरली एन्युटी 20-25 years का चलता है, और अप टिल द life expectancy of these senior citizens. Okay, so अब बैंक के पास क्या आ गया? हाउस आ गया. पहले हाउस किसका था? सीनियर सिटीजन का, राइट? सो दिस हाउस ओनरशिप इज गेटिंग चेंज्ड. बट इफ हाउस ओनरशिप गेट्स चेंज्ड इन a case of reverse mortgage, in the case of reverse mortgage, it would not be taxable in the hands of senior citizens. It would not be taxable in the hands of senior citizens. I repeat again, a house, अब यहाँ पे asset क्या था? What would be the asset? The house was the asset. The house was getting transferred to by senior citizens to bank for what? For monthly annuities or a lump sum. Okay, under the scheme of reverse mortgage. But this transfer of house by senior citizen to bank is an exempt transfer in the hands of transferor who is senior citizen. Hence, no capital gain. Hence, no capital gain. Also, it is clearly written in section 10. It is very, very, very clearly written in section 1043 that any amount which is received by senior citizen, like these monthly annuities, under the scheme of reverse mortgage would be exempt income. यानी ये जो monthly annuities भी उनको मिल रहा है, that would also not be taxable. These monthly annuities which are received by them would also not be taxable. Clear? Sure. House गया, lump sum आया, monthly amount आ गया. Now what will happen? Now suppose if a senior citizen die, that senior citizen died. House bank का हो गया, house bank का हो गया. Bank generally gives an option to legal hire before selling this house. How bank क्या करेगा? Ultimately they will sell this house, right? Ultimately bank will sell this house, but before selling the house they give an option to legal hire कि आप loan का amount जितना senior citizen ने लिया था, you repay it along with interest and take the house back. Or bank can sell this house further. Bank can sell this house further. Now, when bank will sell the house further, then bank के हाथ में taxable हो जाएगा the transfer. Then bank के हाथ में taxable होगा transfer. Taxable कैसे होगा? Full value of consideration would be the amount which they will receive. Cost of acquisition would be the amount of loan. Net would be taxable in the hands of bank. But this is not important for us. The important part here is the reverse mortgage में what senior citizen has given the house to the bank, that is not a transfer. That is not a transfer. Clear? Loan installment देने का जरूरत ही नहीं है because they have the house. Yes, senior citizen will not get the house to them. The scheme is actually designed in this way. Shubham, senior citizens do not have to pay. The idea of reverse mortgage is that here there is no repayment. Here there is no repayment. They calculate the value in such a way that either if you're giving lump sum 60% along with interest for the whole life, or if you're giving annuities, then what suppose first some 62 years age person will come and they decide कि up till 25 years bank will pay monthly EMIs to the senior citizen. Generally क्या होता है loan के case में the person pays the EMI. Here the bank will be paying the EMI. That is why it is called reverse mortgage. There is no concept of repayment. In the hands of legal hires, COA would be the amount of loan paid to bank. You can say that, but पता क्या होता है? COA would be the amount of the previous owner, cost to the previous owner. Why I'm saying so? Because when you become a legal hire, you get the assets along with liabilities. Pooja, see, you're saying that the bank should take the loan and trust amount and the extra profit should be given to the senior citizen. It is not unfair. Yeah, the extra profit is given back to the legal hires. Whatever the extra amount is recovered, that would be given to the legal hires. What benefit bank is getting? See, bank is giving loan. They are giving loan of the 60% value. They are getting a secured mortgage for it. There is no risk in relation to it. So it's a win-win situation. And senior citizens are getting amount for the medical emergency expenditures. One thing remember, senior citizen ये amount लेके they cannot do trading and speculation activities. No. कल को senior citizen को EMI आ रहा है बैंक से and he's investing that into stock market and trading on intraday. No, that is strictly not allowed. Otherwise, they can use it for any other purpose. Okay, so with this, I'll stop the class because if I take up amalgamation demerger, they in themselves are very technical concepts. At the beginning of the class only, I told that the class today will get more technical. Capital gain in itself is an extreme technical topic at first. But as you do it, as you understand the concept, as you move step by step, it becomes easy. There is some extra information also given to you in a way so that you understand the concept better. Please do the question. Now, once the class is over, if you read the topics which have been discussed, step by step, you will always get the answer. Ask the question like, what is cost of acquisition? What is the period of holding? See, do not just blindly do a question. Think logically before doing the question by applying those concepts. Okay? So homework, एक तो आपको वो टेबल बनाना है for section 45(1). Section 45(1)(a) to 55(a). ठीक है. Secondly, you have to read the entire chapter up till page number, because now period of holding फिर से पढ़ना. Now you will get it much better. Up till page, and do the questions also and illustrations also up till page number 4.390. तक do all the questions, read it properly except amalgamation and demerger. जहां पे भी you see the word amalgamation demerger, leave that. Okay, except that, please do the entire questions. Now, few questions. Prabhas has asked, Vasil, if the conversion of bond debenture shares to equity share, please confirm if I right. CO is the purchase price, right? Period of holding would be period of holding share after conversion. So period of hold, see, cost of acquisition in case of conversion would be the cost of acquisition when you're selling the shares which were the result of conversion of bonds and debenture. The cost of acquisition would be the cost paid for acquiring that convertible bonds. Okay, period of holding will begin from the period when convertible bonds were purchased. FOBC will be the sale price of equity shares. Okay, I'm showing that table format. Raghavan, 60% of the house value is converted into loan. वो पूरा time rate के हिसाब से they prepare the EMI chart in a way that 60% shows at the lump sum, बाकी 40% is the interest element. अब वो 60% को आपको lump sum की तरह लेना है या annuities की तरह लेना है, everything goes as per the time calculation and interest calculation. this is the table which I want all of you to prepare yourself and revise the concept of it. You will get everything, students, but please do it first by yourself. You will get the homework also for the next class. Assignment sections may aaj probably by evening you will get all those. Do it, your concepts would be more solidified. Okay. Again and again, I'm saying do not worry with so many things coming. Everything cannot be understood at one part. Step by step, obviously everything can be done. Okay? When you will do this chapter for the second time and third time, you yourself would see, oh, this concept now I can relate it better. Capital gain, when I read first time at my inter level, honestly, I did only few chosen topics like conversion of stock and shares, like conversions of your capital asset into stock, then section 50, 50, 47, etc. Right shares वगैरह no one told me then. Because it actually took me good time to understand these. So if you are able to understand, grab it, fine. If you're not, take it step by step. Anything else? And we wrap up. Thank you so much. Have a happy weekend. See you in the next class. God bless.